Hey guys, so till now we have covered three concepts. Number one is applicability of leases. The second one is to determine how to identify a lease. So if the contract is to be accounted for as a lease or as a service contract and so on. The third one is to determine the lease term as to what is the lease term at the commencement of a contract. So now that we have covered the important key introduction concepts, let's move into the accounting portion. So number one is accounting by leases, lessees. So how would a lessee account for the lease? So the standard says upon commencement, which is lease commencement, a lessee is required to recognize both right to use asset and the lease liability. So right to use asset is an asset on the balance sheet side, and the lease liability is a liability on the balance sheet side. We will go more into the details as to what all costs would be part of right to use asset and what all costs would be part of liability later. But before that, recognition exemptions. LSC may elect not to apply the requirements in IFRS 16 to short term leases where the lease term is less than 12 months or less. And the second one is lease for underlying asset is of low value. So these two we have covered in the earlier sections in the case of short term, which is 12 months or less, or where the asset is underlying low value, where the underlying asset is of low value, then the lessee may elect not to use IFRS 16 and instead expense it off in a straight line method or as and when the payment is made on the P&L account. For short term leases or leases of low value items to which exemption is applied, lease payments are recognized as an expense over the lease term. Initial measurement of right to use asset. At the commencement date, the right to use of asset should be measured at cost. For this purposes, cost comprises of the amount of the initial measurement of lease liability as described in IFRS 1626. Any lease payments made at or before the commencement date less any incentives received. Any initial direct costs incurred by the lessee. An estimated of costs to be incurred by the lessee in dismantling and removing the underlying asset, restoring the site on which it is located, or restoring the underlying asset to the condition required by the terms and conditions of the lease, unless the costs are incurred to produce inventories. So the right to use of asset consists of these components. We'll go more into details in the example, but for now, you know, just to understand, the right to use of asset is sum of your initial measurement of lease liability and any additional direct or indirect cost which is incurred to place the asset to a working condition. After the lease commencement, a lessee shall measure the right of use of asset using a cost model unless the right of use of asset is an investment property and the lessee fair values it to investment property under IS 40. The right of use of asset relates to the class of PPE to which the lessee applies IS 16's revaluation model in which all the right of use of assets relating to that class of PPE can be revalued. Under the cost model, a right of use of asset is measured at cost plus depreciation and accumulated impairment. So, in short, right of use of asset is measured using cost model, which is your cost plus accumulated depreciation every year.